morning. Welcome to IG's Trading the Markets, charting the markets on this Friday morning. It's the 11th of August. Let's take a look at what's happening in the broad sweep of things as we consider the moves in the markets as we end out a week which has really been dominated by inflation, or should I say the story of two angles to inflation. That is the deflation numbers we had out earlier in the week in China, and then came the numbers out in the States that we saw inflation tick up a little bit, but in fact it wasn't as bad as some people had feared. And there's a lot of questions now as to whether or not the Fed's done enough. Going into the next week, inflation remains one of the big targets, I think, so far as the foreign exchange markets are concerned. Wednesday brings the whole range of inflation data out here in the UK, where we get consumer prices, producer prices, we get retail prices as well, where we'll get an insight into what the Bank of England's thinking could be. Has the Bank of England done enough on interest rates as it stands at the moment, or could we see a further 25 basis point rise? I think that's really going to be answered by next week's inflation data out. So we've got to hold our breath until then. In the next 10 or 15 minutes, I'll take a look at what's happening with the euro sterling chart, because there's a lot of pressure on the European Central Bank to keep on raising rates there. And we've just seen some breaking news headlines coming through from the EIA suggesting that we could well see an uptick in pressures on oil prices because of the recently breaking news from the EIA suggesting that we could see record demand coming through from countries as they search out oil. There's just not enough oil being produced in the market. Let's take a look at what's happening for indices on this Friday morning. I want to begin, first of all, with what's going on in the markets here in the UK, because the FTSE 100 has taken a little bit of a nosedive in what has otherwise been a pretty good week overall. And in fact, at the moment, at least, we are still holding on to some of the gains that we've seen on Monday. It's unwinding a little bit. This is the biggest move down that we've seen, you can see here, since the 2nd of August. A couple of things going on here in the London markets. First of all is that we've seen some data out here in the UK this morning suggesting that the UK economy is expanding. And in fact, if you look at the monthly numbers, it's expanding quite nicely in the month of June, where we see the second quarter ramping up in the expansion. But we got the FTSE down today at 75.42. Now, where do we go from here? I think in terms of the numbers to watch out for, I've drawn pardon me, this line down here at 7,400, which was the low we had back on the 26th of June. That could be a price target if you're short on this. If you're short on this, your stop goes above these averages up here at around about the 76.50 level, which is above the 200-day moving average. I'm not completely convinced that this is a downside story. If you look at the longer-term chart, you've got these rising higher lows. And as of yesterday, we've seen a new recent higher high. So there's the potential, I think, for further upside. It all depends on how the rest of today goes. And if you see a further print down as we get towards the 7,400, then that's the price target if you're short on this market. If you're long on where we are, and I wouldn't advise this just at the moment, but if you were, your stop goes underneath the 7,400 level. German DAX is a little bit more interesting as much as its levels of the Fibonacci are holding. And that we've got here the DAX having been supported by the 15,711 level, which is the 76.4% retracement in this mini move that we've seen here from the lows we had back on the 7th of July to the swing high, which was the record high we saw on the German DAX at 16,530 or 540, I beg your pardon. The lines here not quite matching up to the top of that record high, where we have it there. So you can see we've been supported with this range of between 15,709 and 15,866. If you get a candle close below the 15,866, your short position would then take you on down to the 76.4% retracement at 15,709. You get a candle close below there, then you're then on the way to a total retracement, taking you then down to the lows on the 7th of July. Again, this is a market which is waiting on further news and further evidence. The German DAX responds quite well sometimes to economic data. We got the German ZEW out midweek next week, which could be of interest to the German markets. Outside of that, I want to take a look at what's been happening with the NASDAQ, because this is where the other form of interest is for me. And there's been a little bit of an unwind recently in what's going on this market. In fact, this is one of the few markets where we've seen negative pretty much right the way throughout the week. NASDAQ at the moment trading at 15,114, not too far away from the lows of the week, which in fact took us down yesterday to levels not seen since the 11th of July. And it's reasonable, I think, to expect potentially a complete unwind of this little fib march here down to the lows we had back on the 10th of July. In fact, if I get rid of the Fibonacci now, you can see in more detail about where all this is. remind ourselves, of course, that this is a market which has lifted substantially from the lows that we had back on the 12th of October, a 52% rise. So at the moment, at least, this is just a slow unwind of that move up. Is it a retracement? Well, of course, yesterday it is still a retracement, and we're looking to continue on down at the moment, down to the 14,690. So it is just a retracement. It is not a reversal in what is otherwise this big move up that we've seen on the NASDAQ. I'd want to see a candle close below here at 14,690 to start to persuade me that this is a further unwind of some of the gains that we've seen. What would give us further downside? Well, that is evidence that the Fed could well raise interest rates next time around. I think it's the 1st of September the Fed goes with interest rates, and that could well be another opportunity then to watch out what goes on. If you see more evidence that the Fed's going to raise interest rates, then I think there's potentially more downside to go for the NASDAQ. If you're short on this market at 15,112, your stop goes above here, which is the 15,500 level, which would be a good place, a nice round number for your trade. If you see further downside, that's your price target at 14,690. Take a look at what's happening on the foreign exchange markets. The week's really been dominated by the news coming through on CPI in both China, where we saw deflation, and the US, where we saw inflation. But the inflation ticking up a little bit, but not by as much as some had been fearing. And that big question about whether or not the Fed's done enough remains the big case for the situation. Let's take a look at what's happening with the euro-dollar trade. There's two sides, obviously, to any foreign exchange trade. And I wanted to highlight the fact that we've got this market which is going long on euros at the moment. There was evidence earlier in the week in the swaps market to suggest that the European Central Bank is now expected to keep on raising interest rates as we go into the autumn. Certainly we expect another 25 basis points at the next meeting. That's more certain than the Fed, which potentially could well skip that next meeting. And then thereafter, depending on what the inflation data and the growth data looks like, the ECB is expected to continue to raise interest rates into the back end of the year. And if you're long on this at 109.84, stop goes down here underneath this line down here around about the 109 level. If you're long on euro-dollar trade going into the data out over the next few weeks, we've got the German ZEW next week, which is expected to highlight the fragility of the German economy. But the European Central Bank's got to look beyond Germany and has got to cater for the rest of the Eurozone. And at the moment, at least, the European Central Bank is raising rates, much to the concern of German politicians who want to see the European Central Bank start to lessen their hawkish position because of the problems that the German economy is in there at the moment. So that's the euro-dollar trade. With the Bank of England widely expected to be swayed by next week's data out on UK inflation midweek, I think that could well be a big turning point in this trade here, which is the euro-sterling trade. I've drawn these four ellipses here, these circles, on this line at 87 pence. This is the euro trading against sterling. 87 pence is a really interesting level to watch out for. Over the last, when was that? Since the June last year, so over the last year, you can see four touches here on this line. It's been twice as it's been resistance before today, and it's also been support. You can see it was resistance again back on the 20th of July, and that is my price target for this move. At the moment, we've got sterling slightly stronger today. This is the euro moving down against sterling. We got sterling slightly stronger today because of the growth data out this morning. Second quarter growth numbers coming through a touch higher than expected on a quarterly basis, but quite substantially higher in terms of the June number, which came in at 0.5%. We have been looking for something like 0.2, 0.3% growth for June, but the monthly data showing relative strength. So we got sterling on the way up today, which shows this euro down. But I think the risks potentially to next week's inflation data, when you consider what happened this time last year, because we're looking at an annual basis where we saw inflation ramp up towards the summer last year. And I think some of the comparatives are going to start to unwind, and we could well see a bit of a step down in the inflation rate when we see that data out next week. If we do see a weaker or a softer number than had been expected, I think that it really shows that the Bank of England potentially has possibly done all it needs to do and just keeps rates where they are rather than raise them further. Now, so if, like me, you believe that there is this setup where we've got inflation beginning to come down here in the UK, I'm not saying it's going to go away, and I'm not saying it's going to get anywhere near the Bank of England target of 2%, but I think just it might surprise on the downside next week. If you are long on the euro against the US dollar, then you would look to be buying this with a stop underneath the underside of this rising line of support. So you'll stop at around about the 85.7 pence level. We're currently trading 86.46. One other area of the market I wanted to catch up on was the Australian dollar. Next week, we've got some numbers coming out in Australia, which is for the RBA meeting minutes that we saw last week or two ago when the Reserve Bank of Australia left interest rates on hold at 4.1%. Now, there's been a lot of speculation that the Reserve Bank of Australia could well be moving up to 4.85%, but none of it. Whilst the Aussie Central Bank wants to keep interest rates where they are for the foreseeable future because it doesn't believe that inflation has been beaten totally, there's an expectation we could well see that the doves are being allowed to breathe at least now, and the hawks perhaps maybe go further into the air, a little bit further distant. And as a result of that, potentially for this further downside for the Australian dollar against the US dollar. Now, I've drawn this technical setup here, which shows that we've got this double topping pattern. When you get a double top, it reaches a level and then rebounds. You don't know early on in this trade whether or not you've got a double top developing. When we saw the swing low at 57.97, which I've drawn on here, which you can see has been an area of interest before, it's around about what, 66 cents, 65.97, and then it rebounded, and we then saw this double top beginning to crystallize with this reversal here at the 68.92, which was the high we had pretty much around this level here on the 16th of June. Now, the completion of this, or rather the trajectory, the trade really developed when we saw the Aussie drop below this line of support at 65.97. Now, that's a real classic double top pattern. The way you trade this is then you work out the height of this channel, which I've done here with this dotted line, and then you replicate that with the break here. Now, the break came through, you can see Tuesday, the 1st of August, it absolutely hit that and then sprung up. And then on the Wednesday, the 2nd of August, we saw that big candle down. And you get big candles moving when you get these events happen, that you see a break of lines of support or resistance. And that was a really good indicator. I haven't got the volumes on here, but I wouldn't mind betting that volumes were up that day as well. Anyway, you got a break of this. My projections then came down here, and I've now got a target price of 63 cents for the Aussie against the US dollar. So if you are short on this at 65.23, you do have a little bit of a headwind or a support line here at 64.56. But assuming that's broken, if you get a break of that, is then a trade all the way down to the levels that we've not seen there since the 4th of November. That's not quite exactly where we are, but this is absolutely where the projection takes us. So that would be your price target at 63 if you're short on Aussies against the US dollar. Now, let's take a look at what's happening in the commodities markets. We've got some breaking news coming through just before we went to air. We had some news coming through from the EIA. This is the energy agency in the States, suggesting that we could well see record demand coming through for oil in the coming months. And I'm watching for some sort of reaction in the market to come through for Brent and WTI. At the moment, if you look at this chart here, you can't see any developments that we've got on the upside at all. But the EIA seemed to be quite happy in its statement out this morning. Just to quickly reread that, global oil demand hits a record and prices may climb. That was on the Bloomberg terminal just a short while ago, coming through from the IEA, the International Energy Agency, suggesting that we could well see some further upside for the price of oil. And look where we are, down for a second day. No evidence just yet of any move up. Let me just quickly show you what's been happening on a 5-minute candle chart. There you have some breaking news developing as we see. And as I'm just talking now, live on Charting the Markets, you can see this market beginning to punch higher. So let's go back to take a look at a potential long trade and see if we can get IG clients to benefit from this move that we've got. Now, I've drawn this line of 87.15 as the highs that we had here back on the 12th of April. That line still remains on my charts. And you can see in the last couple of days, we tried to get beyond it. In fact, we did get a fractional candle close beyond it on the 9th of August, then this pullback in the last couple of days. But as we've just seen, the intimate second by minute candle chart is beginning to show some bear some fruit. So let's set up a trade on this at 85.89. There is a round number just below where we are. Let's bring that up to there, to $84 the barrel. So I put my stop just below there, 83.80. good point to be. It's a psychologically sort of round number, important number. Currently trading at 85.89. This is the line to break. A decent candle close beyond 87.15 would then cement this idea that you've got further highs to come. Now, Brent, just in the last few days, has scored a new 6-month high, not seen since the 27th of January. WTI, in fact, went up to levels not seen since November last year. So that was an even stronger sort of number to look at in terms of where it's breaking to. But I just want to show you what's going on at the moment with this Brent chart. And to set up this trade, as I said, your stop goes below the 84. Where do you go then? Well, to be honest with you, there's not an awful lot stopping you until you get up to the highs that we had here, up at 99.06. Now, that is a long way away from where we are at $86 a barrel. But nonetheless, you can see, apart from these highs we had back in January, which is just above where we are, this is a fairly strong headline from the IEA suggesting that the oil markets could well rise. We'll have to see how things develop into next week. MACD beginning to curl over. We haven't yet got a turnover with the blue line below the red dotted line. If you get that, then it would suggest that momentum is on the downside. So that could well unwind. We'll have to see how the next few days travel. But I just want to alert you to that headline as an area of the markets I think worth looking at. Let's take a look at what's happening with gold. As we've been saying on IG early morning call, that we've been looking at gold in the context of the inflation numbers out in the States and the fact we've got the dollar holding on to recent gains. If we see any further acceleration in dollar trade, then I think we then could well see this gold trade dip below and close below and then go on down, further on down below this 1911 level, which is the Fib 61.8% retracement. Any further downside from this, and you go to break the 200-day moving average, and I think then that would open the floodgates down to 1870. If you're short on this at 1911, your stop goes above the 1950 level. If you're short on gold, you'll be losing on that trade at the moment because a little bit of a green candle, but it is using this line of support on the Fib retracement at 61.8%. But if you get a break of the 1870, you're then on the way down to 1804. I think there's a number of short positions that had to be taken out before we get a further rise in this. But I think some of this is going to have to be some dollar softness as well, which is just not what we're getting there at the moment. I want to round off on what's happening on the commodity markets with a little bit of a trade for you around copper. We've been hearing a lot about this deflation number in China and suggestions that the authorities in China are going to start putting some sort of a package together to try and steer the economy away from falling prices, which doesn't do anybody any good. But at the moment, if that happens, I think if we do get some stimulus coming through from China, we could well get a reversal of some of the fortunes we've got here on the copper chart. But I want to show you this copper head and shoulders chart here and how to trade this. If you watch the early morning call, you'll have seen me talk about this before. Measuring the head here, which is the peak that we saw in this trade up at almost 8900. You measure the height to the neckline. The neckline is established by this second shoulder projection here, and then you take your projection of a break of the neckline down to the levels down here. And I'm calling, for my own personal trading perspective, for a price target of $8,000. I beg your pardon, $8,000 the ton. And if you look at what's happening here, this is a trade that's beginning to work out. I haven't got a position on this, but technically this is how you trade this. Now we've got this entire candle below the neckline. If you just enter a trade here, your stop would go above the neckline, somewhere around about the 84.50 level. 83.01 is where we are. Price target is at 8,000. And that's a nice little price to risk to reward ratio if you conclude that that's a risk worth taking. Not a trade recommendation, it's just a setup that we use in terms of some of the patterns that we've got technically. A trade idea to look out for as we go into next week. That's it as we conclude this week of Charting the Markets. We'll be back on Monday at the same time. Hope you can join us there. And Angeline will be with you at 4 o'clock this afternoon with a look ahead to next week's trade. Have a good weekend. We'll be back on the early morning call on Monday morning with my colleague, Angela Barnes.